Well, good morning, boys and girls. Welcome to our Wednesday morning trading room. I finally have my data issue from the other day resolved. I don't know what it's been the last couple of days with my data feed acting up on me, but hopefully I've got it squared away. I hope. All right, for those of you new to the room this morning, welcome. My name is Eric Senft. I'm going to be your host here for the next hour and a half. And just a real quick overview for those of you who haven't seen the DTS system before. It's called the Diversified Trading System because we're looking at the market from three different points of view. Here in the top left, we have our Hawk micro scalper. This is our scalp signal generator. Here on to the right of that, we have the Falcon swing trader. Bottom left is the Eagle trend trader, and the bottom right is the Raptor, which is sort of a hybrid. It incorporates elements of the scalp, swing, and trend trader all into one trading system. Signals they all generate the same way. Namely, we get a warning dot along with an audio alert that tells us that the signal parameters are starting to form, and then we get a triangle and a hash mark which tells us that the trade is complete and it's time for us to make a decision. As you're going to see here in a moment, we don't necessarily take every single signal. For instance, these signals here on the yellow bars with the Hawk, we ignore those because yellow bars are very neutral. Here on the Hawk right now, we're getting a first micro-macro cross signal. This tends to be a pretty powerful signal. We've got a little bit of an opening gap though, but you know what? I might give this one a go. So what I'm going to do here, I'm going to show you how this whole thing works. The tool I'm using here on the right-hand side, this is called the Trade Manager, and I'll get more into the Trade Manager in a moment. But you see we've got the warning dot. Oh, actually the market slipped a little bit. I can adjust my parameters a bit. All right, and what I'm going to do is I'm going to undo my profit target, and we'll see if we can't run this trade out a little bit. So we got the warning dot, we got the triangle hash mark. That tells us that the trade is ready to go. Looks like we got slipped a tick on the entry. And if we didn't get slipped, I think we would have hit our profit objective. Yes, we just hit our high probability profit target. But we're going to hold out a little bit of hope here that perhaps the market might try to get into that big opening range gap, which I will show you here in a second. So let's take a look here at the Eagle and look at that. So the market left off up here yesterday around 44.45, fell sharply through the Asian or the close in the Asian session, pretty quiet through the European session, but we've got a rather substantial opening gap up here. Here's the issue for us at the moment as far as the Eagle is concerned, is we've got this sideways trading range, don't we? With the Eagle, what we're looking at is we're looking at this band. No, it's not an Ichimoku cloud. I know it looks like one, but it's not. But this band gives us our directional bias. So right now the band is tipped to the sell side. Now we've just flipped over to the buy side. I wouldn't mind seeing a little bit of a retest here, come into this hard edge, come out, produce a buy signal. That would be something that I might be more interested in buying. Now I should point out the charts that I'm following here are the Nasdaq. But I'd be happy to take a look at any market which is of interest to you. I'm also following crude oil and gold on my other monitor. This tool here, this is the Raptor. And the Raptor, again, you see it's going to produce signals the same way. We're getting a warning dot. We're going to look for the triangle and hash mark, which is going to give us confirm our buy signal. And the tool I'm using here on the right-hand side, this is a cousin to the Trade Manager. Oops, I hit my buy market button a touch early there. I thought I had my triangle hash mark. I just had my other warning dot. Okay, we'll keep our fingers crossed on that one. Actually, what I should do is I should punch out until I get my signal, which I can put in this way. That'll be better. All right. So we got the warning dots. I know if this one finishes up here, we will get the triangle hash mark. We will get our buy signal. See, there it is. All right, so we got our fill. I would have been okay. And let me activate a trailing stop strategy here. These tools that you're seeing me use here, this is, like I said, the Trailblazer. It's very similar to the Trade Manager, except for the built-in risk component, which I'm going to talk about here in a moment. But this tool, it allows you to set up how many contracts you want to take. It allows you to preset profit targets. So you can see I've got one contract I'm going to scalp for 10 ticks. I've got another open contract, which I'm going to leave in as a runner. It does not have a profit target. And then down here, I've got 16 different stop strategies to choose from. And I can customize them all to however I want. Right now I'm using the swing strategy just to get me started. And you can see, let's say I want to make it a little bit further away. I can do that as well. If we take out the high here and the market actually starts to rally a little bit, what I'm going to do is I'm going to go with a more aggressive stop strategy. Here with the hawk trade, you can see we're already fairly profitable. I'm going to go adjust my stop strategy here. I'm going to go with an ATR strategy. Actually, maybe I'm just going to move the trade to break even at the moment. Sure, here we go. Okay, so I've got the ATR strategy, and what these blue dots mean is that this is how the Trade Manager is automatically going to manage my trade. So you can see here in the history, if I didn't have a buy signal, but let's say we bought here, the Trade Manager would have rolled my stops according to this stop strategy. In fact, let me see what parabolics are doing. Yeah, parabolics are about the same. We'll stay with the ATR strategy. It's going to keep me below the swing low, and hopefully we'll see the market continue a little bit higher here. Before I leave the Raptor entirely, you're probably wondering what this speedometer looking thing is. This is called the Geiger counter. This is an add-on tool. It gives you market flow information. So it's essentially a tape reader. You can see we've got the bid and ask displayed here. We've got a history of the bid and ask. And more importantly, or part of the tool that I really like, is this dial that's right here. With this dial, you can see the immediate buying and selling pressure. And what we're looking for is, since we're long, I really want to see this dial pull here to the buy side and hold. There we go. Oops, it didn't hold. I want it to hold for like a good 3 or 4 or even 5 seconds. That shows me that there's some serious buying going on and that the buyers are starting to chew through those orders. The way it keeps pulling here to the short side and holding, that tells me that we're probably going to see a little bit of a move here to the short side. But our trade hit, oh yeah, we're just at, we rolled up from the stop here. What I'm going to do is I'm going to disable the stop strategy for a moment and hold that down here. And hopefully I'll be able to show you how the Trade Manager, or in this case Trailblazer, rolls the stops for us. So just looking for a little bit of an uptick there. And while we're doing that, let's take a quick look here at the Falcon. The Falcon, this is our swing trader. And here too, like the other tools, we're going to get warning dots, we're going to get triangle hash marks. For the most part, what we're looking for is confluence. We're looking for green signals, green indicators, green filter. That gives us a buy signal. So here with the Falcon, just right around the open here, we had what we call a trend change signal. So our trend line went from red to green, and then we have this characteristic little up, down, up pattern, and we generated a buy signal right there. See that? What this shows us is that there's momentum, enough momentum to change the trend line from red to green, and then we get the sellers trying to fight the market back down, and then the buyers step in and confirm that in fact the new direction is going to be higher, at least enough for a swing trade. And you could go in here and you could set up your swing trade, and voila, you hit your swing target. Now, one thing I was going to explain here, the difference between the Trailblazer and the Trade Manager, is that the Trailblazer has this built-in risk component down here. And all that means is that the Trade Manager is never going to allow me to risk more than I can afford. So I can set up a trade, say like this, and you can see my risk amount is $315. What if I want to run below the median line here on the support and resistance suite? Okay, a little bit of a rounding error, but the risk is going to be between $300 and $400. What if I want to run my stop way down here? Oh, look, the risk is still going to be around $300. Again, this is just a little bit of a rounding error. I'll show you again on the Hawk, which, because it's a scalping tool, it allows me to be a little bit more precise. But the whole idea is that you can't blow up your account. That's the very important concept there. Here on the Falcon, I've also got the Ultimate Support and Resistance Suite. No, these are not pivot points. No, these are not Fibonacci levels. They are much better, and I'm not just saying that. They are much better. It's an assortment of 21 support and resistance lines for today's trading. And this is also an add-on, so that means you can use it on any chart, not just a DTS chart. You can see right now we're sandwiched between, well, we're pretty much skewered by the median line. The blue line above is primary resistance, the blue line below is primary support. These three lines tend to set the tone for the day. If we get above the primary resistance, so it looks like 44.21-ish, 22, that's going to be our stumbling block. If we can get above there, next stop looks to be around 44.38¾ to be precise. 44.39, 44.40 in that zone is where the market's likely to move to. So that seems like a plausible target. We'll keep that in mind as our trade progresses. And that, in a nutshell, is the DTS system, really. And after this, it's just a matter of learning to interpret the signals. So here at the moment, we're getting a green bar sell, which is actually a sell signal. This is also our counter trend signal. If you chose, you could look to buy the failure of it. In other words, if the signal breaks down now and the market trades above the high of the signal, you could look to buy that. And there's enough room in there to scalp before we get back up to the high. We'll just see how this unfolds. And the signals, I know it may look a little bit confusing right now, especially if you're new in the room, but really They're not that difficult to read. We have these little cheat sheets that help you learn to identify the higher probability signals. Here's the cheat sheet for the hawk. So we're going to look for things like the first micro-macro cross. We're going to look for things like the macro pullback, which is essentially a signal that is all in sync except the micro line goes out of sync. We're going to look for 4-arrow consolidations. We're going to look for the signal after the consolidation. And then last we have the red bar buy or the green bar sell, which can be our with trend or counter trend signal. All right, so things unwinding a little bit here. We've got a fairly tight looking trading range. We are getting a first micro macro cross lower, which I'll show you how that one works. All right, so I'll leave the scalp target in on this one. Oh, no, actually, you know what? I'm going to disable the scalp target. Normally, we would just go with the scalp target, but I want to show you how the stops work here. So I'm going to move into the parabolics. And we're going to enable the parabolics. Oh, come on. See that? Did you see how the trade manager took the stop and automatically moved it down according to the stop strategy? If we can get this bar to finish lower, we'll get it to tick down again. Come on down. There we go. Come on. Normally, I'll switch to a parabolic or a bar high-low strategy or something that's more aggressive after the trade already has a fair amount of open profit. Normally, to start the trade, I'll go with something a little bit more conservative, maybe like the swing high-low, in which case it's going to keep my stop up there. But like I said before, these are all customizable. You can move them around however you want. So did you see that? Our stop was up here. Now the swing strategy has moved it down here according to our settings. This is now the next strongest swing high. We have hit our high probability profit target, but I'm hoping that, you know, maybe I can run this one out a little bit to show you how this works. Or not. A lot of times when I'm scalping, I'll just scalp. Just take the profit. Because you can see, you know, we've got two contracts in play here. That's $100 on the table.
Hello.
There we are. And sorry about that. Somebody trying to call me during trading hours. All right, so there we go. We're making a little bit of progress. I'm going to switch to the parabolic mode now, just so that you can watch how the trade manager rolls our stops. Parabolics are good in that if you have a fair amount of open profit and the trend starts to weaken, the parabolics are going to get in there really quick. The only other more aggressive stop strategy we have is this one here, the bar high low, which, you know, is going to follow the market very closely. Let's say we're going to go with a 2-bar offset, 2 bars back, 2 ticks off. That's going to keep our stops very, very handy. It's going to get us out on the first sign of weakness. And so far, that's pretty good. We've $200 on the Hawk Scalper. That's a very decent little trade right there. So that first micro-macro cross signal right there Very high probability signal. Here's another first micro macro cross signal on the hawk. This is a type of signal that I'll take almost without exception. It's that strong of a signal. In fact, I often maintain that you could make a living on the first micro macro cross signal alone. Here's another first micro macro cross signal in the overnight. It took a little bit of heat, but it too fell off, hit its target. I'll just find you a couple of more so that you can see that I'm not fibbing. Here's a first micro macro cross that developed about 15-20 minutes after the close yesterday. Here's a macro pullback, which also happened to be a 4-arrow consolidation pattern. Here's the post-consolidation pattern. Here's another macro pullback. So you see, high probability signals, signals that you can take with a great deal of confidence, not at all difficult to interpret. See, macro pullback, micro line goes out of sync. Pretty simple, right? Everything else stays in sync. First micro macro cross signal, as the name suggests, it's the first signal where everything is in sync after the micro line and macro lines cross. Now I know you're looking at this and saying, well, why didn't it give the signal earlier? Well, sometimes it does. Something happened here during the closing minute that it just unwound a little bit too fast. And the signal parameters weren't right, so it took another minute or two to print. Here is the red bar buy signal right here. And remember how I said this is also a counter trend signal where we set up to short the failure. So you could have shorted that and caught that initial move as well. All right, let's go back to the live action now. It looks like we're just kind of hovering a little bit. Yeah, Tony says the bears are ignoring the opening gap. They certainly are. It looks like, I don't know if we're in a going to be in a trading range today. Here's the low of the morning. Here's the high of the morning. And yeah, we're just kind of flip-flopping a little bit. We did get a cloud crossover signal here on the Raptor. It is at the bottom end of the range, which I'll admit makes me nervous. We got a soft edge sell signal right here, which kind of gave you an opportunity to get in part of this. Robin, great question. Robin asks, hi, are all 4 screens part of the same one system, or can I trade just one? The 3 screens that you see here, the top left, top right, bottom left, are part of the DTS system. So those 3 kind of go together. You've got your Hawk Scalper, you've got your Falcon Swing Trader, and your Eagle Trend Trader. The premise is that the market condition changes. You know, we've all had the situation where you've got a good day trading and you may have 1 or 2 good days trading, and then the 3rd day the market beats you up, right? Your signal works great for a couple of days and then it doesn't work for the next week. What happened? Your signal's the same. Why aren't you making money? Well, what happened is the underlying market conditions have changed, but you're trying to use the same signal. You know, it's like that, my grandfather always used to say, if the only tool you have is a hammer, then every problem tends to look like a nail, right? It's the same kind of situation. Well, here you have 3 different hammers. You got a hammer for when the market is in scalp mode, you have a hammer for when it's in swing mode, and you have a hammer for when it's in trend mode. We had some DTS owners say, you know, I'm trading off of a laptop. Can you give me a 1-screen system? Well, that was kind of the impetus behind doing the Raptor. The Raptor employs elements of the Hawk the Falcon, and the Eagle all into one trading screen. So to answer your question, Robin, if you just want one screen to follow, the Raptor is the tool for you. If you want a little bit more complexity and sophistication, then maybe you want to look at the DTS system. I use the analogy of a hybrid car. You know, a hybrid car like a Prius, that's the Raptor. It gets you from A to B. It does it very efficiently, but at the same time, it's not a Corvette, nor is it a pickup truck. Does that mean, you know, you can't get going fast in a Prius? Well, sure you can, but you won't do 0 to 60 nearly as fast as you will in a Corvette. Does that mean you can't, you know, haul stuff around in a Prius? Of course you can, but you're not going to haul as much stuff as you will in a Ford pickup truck. So it's a very loose analogy, but it's the best I can come up with right now. David asked, do you get more signals on DTS versus the Raptor? As a general rule of thumb, I would say yes, because the Raptor, like I say, is a hybrid. But I'm going to show you guys something here in a minute that's going to hopefully change the way you think about the quantity of signals that you should be taking. And for you DTS owners that have been with me in the room for a while, go get yourselves a coffee. You've probably heard my rant several times before. The Raptor sacrifices, and I'm using air quotes, sacrifices quantity of signals for quality of signals. We're going to get higher quality. Well, I shouldn't say higher quality because the signals are all quality. The tools have been designed to produce quality signals. So to say the Raptor signals are of a greater quality than the other tools is not correct, but it sacrifices frequency for quality. So here on the Hawk, because it's a scalping tool, we're going to produce more signals. It's the nature of the market. On the Eagle Trend Trader, we're going to produce fewer signals because it's the nature of the indicator. Right? We're looking for trend signals here. The market's not always trending. So the DTS system gives you a greater diversity of signals, and as a result, you will produce more signals with the DTS system. That said, making more money does not mean taking more signals. All right, let that sink in there for a moment, because most people think in order to make more money trading, they have to trade more often. And that is false. If you do that, your broker will make more money, but you won't necessarily make more money. Trading is all about probabilities. You're not going to make more money trading 50 times a day. I had a fellow come to me one time. He said, I want you to teach me to be a scalper. I want to take 100 trades a day. Because in his mind, as a scalper, you take 100 trades a day. I said, you will never make money trading 100 times a day. I guess he didn't like my answer because he never came back. If you are a high-frequency trader with a multi-million-dollar computer trading platform and you're parked a block from the CME, you can probably trade 100 times a day. You can micro-scalp for fractions of ticks here and there, and you can make money. That's how the high-frequency traders do it. That is impossible for us retail traders to do. But does that mean we can't make money? Of course not. Of course we can make money, but we have to be smart about how we make money. Did you know that if you trade twice a day for $50 per trade, and you traded 25 contracts on the E-mini, you would make $500,000 a year. Two $50 trades a day. Not 20, not 10, two. Two $50 trades with 25 contracts, you will make $500,000 a year. Okay, I can hear you guys saying now, okay, well that's great, Eric. I can't afford 25 contracts. See you later. Okay, what about 5 contracts? That's $100,000 a year. Okay, can't afford 5. What about 3? That's $60,000 a year for finding 2 $50 trades a day. Can't do 3. How about 2? That's 40 grand. 1 is 20,000. 1 contract twice a day for $50 each trade gets you an extra $20,000 a year. If nothing else, you can use that money to build up your account to where maybe you can trade 3 or 4 or 5 contracts. So here on our Hawk tool, this is our scalping tool. And I'm going to switch it here to manual mode, so we're just taking single contracts. Boom, 50 bucks, 1 down. Here's the other first micro macro cross signal that we were watching out of the open. This is the one that we took. Boom, another 50 bucks. There, my day's done. See you later. Now, if you use the trade manager component and you use your risk mode here, I'm only risking 2% of my trading capital. Let's say I set up my trade like so. I'm going to take it below this swing here in the micro line. Boom, I hit my target. There's 100 bucks. I could be done in 1 trade. If I do that every single day, I will make $20,000 in a year. But it's early. It's only 2 minutes into the session. Let's say I hang around for another 20 minutes and, oh, I see this trade here, which is another one that we took, right? Boom. Now I'm up 200 bucks. You see, folks, it's all about the quantity. It's not about the frequency. Yes, these trades worked out as well. You know, the buy signal here, the buy signal here. These worked out as well, but hey, look, there was a signal here that did not work out. It did not hit its profit objective. This is why we focus on the high probability setups. Remember this page I showed you? You see there's signals in here that we don't take, right? We didn't take this signal, the one right here, because that's not a high probability signal. We didn't take any of these signals up here. They worked out for our scalp target, but it wasn't a high probability signal. We focus on the high probability signals because these are ones that we can take with a great deal of confidence. And after that, it becomes a numbers game. You don't need 100 signals a day to make money. Your broker would love you if you traded 100 times a day. You'd get a great Christmas card from your broker, maybe even a nice little bouquet of flowers, maybe even a personalized phone call. But that doesn't mean you're going to make more money. The secret to trading is actually trading less and capitalizing yourself correctly so that when you have a winning trade, you maximize your earnings. Right here, macro pullback signal. So we go in, the trade manager does its thing. It says, okay, Eric, according to your account size, you can afford to trade 2 contracts. Boom, down it goes, 100 bucks. Let's say this high probability signal did not work out. Let's say the market, you know, because as good as DTS system is, it's not 100%. Let's say the market did one of these, it peels against me and it stops me out. All right, I got hit. It's unpleasant to be sure, but you know what? I did not lose more than I could afford. If there's one thing I guarantee most 99% of traders do wrong, well, certainly 90% of traders, because we've all heard the stats that 90% of traders lose money. You want to know why 90% of traders lose money and only 10% make money? Because they don't correctly capitalize their positions. They lose far more than they can afford, and when they have a winning trade, they don't earn enough. Here's another scenario that's probably familiar to a lot of you who have been trading for any time at all. You start the day and you say, oh, I'm going to be conservative today. I'm only going to trade 3 contracts. Never mind, you may have a $10,000 account and you can only afford to trade 1 or 2, but you're going to go in with 3. And the market throws you a signal early and it's a curveball and you take a loss, and let's say you take a $300 hit. All right, so you get in there again, next signal, you take another, say, $200 hit. So now you're down $500 on the day, and you're thinking to yourself, oh my gosh, what am I doing, $500? I'm going to scale down. I'm only going to trade a single contract. And of course, what happens on that single contract? Right? You get the signal and the market falls, and you punch out and you make $100. Okay, so you finally caught a winning move, but your earnings weren't enough to even put a dent or a significant dent in your earlier losses. So you're still down $400 on the day. Much better for you to correctly position yourself so that when you have a winning trade, you hit your profit target, you maximize your earnings. If the trade goes against you, you never lose more than you can afford. You see, every single time I set this trade up, I'm never risking more than 2% of my capital. Even if I took 10 losing trades in a row, which statistically is a very real possibility, I've never done it, knock on wood, but it is a real possibility. Even just rough math, that would be a 20% drawdown. I would still have 80% of my capital. But yet the way most people trade is by risking too much. Let's say, you know, you're trading a $10,000 account and you're taking a $300 hit every time. You have 10 losing trades in a row. You've just lost a third of your account. That's a stinger. Or as a fellow who I was coaching who had a difficult time with this concept, he was leaving himself open to wiping out half of his account because he was risking far too much money. Okay, so I won't beat that horse anymore, but it's a very important concept. Robin asked, what kind of win-loss ratio do you experience generally? Well, like I said, these are high probability signals. Something like the first micro-macro cross signal is well into the 80% win ratio. In fact, I had a Falcon owner who was a mathlete, and he did his math on the Falcon, and the high probability signals on the Falcon were returning 83.3% is what he told me, win ratio. So again, you can take these signals with a great deal of confidence, which is why, another reason why the indicators look the way that they do. These are stripped down. There are about a half a dozen parameters going on behind the scene before you even generate a warning dot. But the tools have been stripped. The programmer had, you know, some fun trying to make them look pretty and whatnot. But essentially, the information is here so that you can easily make a decision. Right? Trend line changes color. Here's the first signal where everything is in sync. We got red bars. We've got a red signal. We have a red trend line. We have a red filter. Let's sell it. Here, we'll pretend it's real time. There we go. That's our first signal where everything is in sync. Let's say we put our stops above here, and down we go. We hit our profit target. Hooray for us. So that's the whole point with the DTS system. That's the whole point with the Raptor system, is to make it easy, remove the confusion. The DTS system is, apart from the bar colors and the brick size, is not tweakable. You cannot change any of the settings. They are all locked, and for good reason, because traders love to tweak, and sometimes you end up tweaking yourself out of a good setting. The Raptor is more tweakable. I guess we decided to include that for people who just could not resist tweaking their settings. But the Raptor, you can adjust more things. You can adjust your cloud sizes. You can adjust your brick sizes. You cannot adjust the signal generation. That's pre-programmed. Michael asks regarding my little rant, are you talking about selling 25 contracts at the market? No, Michael, the point was that you don't need to trade 100 times a day to make money. You need to trade twice a day, find 2 high probability signals that will generate you at least $50, and then go in there with as much volume as you can muster. If your account size allows you to trade 25 contracts, then yes, trade 25 contracts. If your account size allows you to trade 2, then trade 2. But always leverage yourself correctly so that if the trade does not work out, you haven't lost more than you can afford, namely the 2% rule. Don't risk more than 2%. But at the same time, that's going to keep you leveraged so that if the trade does work out, you've maximized your earnings. You've all heard, cut your losses short, let your profits run. Everybody thinks it means set up your trade so that you have a super tight stop and eliminate your profit target so that the market has, if it goes, you stay with it. Okay, well, that's one way to do it. That's a very difficult way to do it because we all know the market's not trending every single day. A better way to cut your losses short is to cut your losses short by not risking more than you can afford. Let your profits run by maximizing your earnings on each trade. Not in that you're going to catch a big move, but rather you get in there and you've maximized your position potential, your profit potential. I'm sure most of you have heard of Richard Dennis and the Turtle Traders, the whole movie with Eddie Murphy and Dan Aykroyd 20 some odd years ago. Gosh, I guess it's 30 years ago now. Trading Places. If you haven't seen it, look it up. It's a fun movie. The whole Richard Dennis, part of the reason of his success is that he used position sizing. He never ever risked more than he could afford to lose. That's very important. I guarantee that I know 90% of traders risk more than they can afford to lose because 90% of traders go broke. Simple as that. Yeah, like Tony says, 3 out of 5 trades. Tony is one of our DTS owners. He has 3 out of 5 trades work out. After working for 30 minutes, I can switch to sim, make my daily profit due to the power of position sizing. And Tony likes to trade all in, all out. But again, it's using the multiple contracts. I'll tell you another story. This is, again, about one of our DTS owners, and I'll see if he's in the room today. I don't want to embarrass him. No, he's not here. He was always a onesie-twosie kind of trader. And he traded for, I think he told me about 3 years. He made a little money. He lost a little money. He made a little money, he lost a little money. He never got any traction. Then he got the DTS system, he got the trade manager, and he started correctly position sizing his trades. All of a sudden, he's making money. You guys want to know the true secret to trading? The true secret to trading is not the next shiny object. It's not, throwing... Oh, and by the way, for those of you who say, well, can I use, say, stochastics with this tool? Or let's say you're really stuck on, what's another one here? Let's say you're really stuck on momentum. Can I put momentum on there? Yeah, by all means. The DTS system is powerful enough that you can incorporate these things. If you feel you cannot trade without stochastics, then by all means, throw it on there. But will this help you make a decision? Is it going to help you short this macro pullback signal? Is it going to keep you from, look at the first micro-macro cross signal here. You're already oversold on your stochastics. Is that going to keep you from selling? If it is, get rid of it. You don't need it. But this trader, who was always a onesie-twosie trader, he got the DTS system, he got the trade manager, he started correctly position sizing his trades, and all of a sudden he's starting to make money. So much money, in fact, that he quit his job. So much money, in fact, that 2 years later he is soliciting funds. He's trading other people's money for a living. That is the power of position sizing. Like, I'm sorry, I know I sound like a soapbox preacher sometimes, but nobody is talking about these things. You go to the internet forums and everybody's saying, oh, what are the settings on your MACD? What are the settings on your stochastics? I'm sorry for laughing, but folks, that's not the answer. The answer is correctly position size yourself. Get yourself a solid signal generation, something with a high probability success, like a first micro-macro cross, like a macro pullback signal. Get in there, take your 2 or 3 trades a day, or like Tony says, he'll take 3 to 5 trades. Put the probabilities on your side. The probabilities of finding 3 to 5 successful trades a day are a lot higher than trying to find 20 or 30 winning trades a day. Shoot, trying to find 20 or 30 winning trades a day, unless you're scalping in and out for a tick, which of course isn't going to make you any money at all, is going to be impossible. Put the odds in your favor. All right, putting my soapbox away again. Let's see what's going on here. Yeah, Jim says the bears are pretty hungry today. Well, we were looking the other day at, I'm just going to build you a quick little Nasdaq chart here. And if you folks are wondering, is this what the trading room is like? Yeah, sometimes it is. Sometimes I get on my little detours. But it's such an important concept. This is what we were looking at the other day on the Nasdaq. This is true across the board for any of the stock indices you may be following. Remember, we were looking yesterday and the market was like this, and I said, we take out this low, the market's in for a tailspin. So those of you who are stock index traders, E-mini, Russell, Mini Dow, Nasdaq, you're going to want to stay short for a little while here. Don't get too interested in buying anything. I'm guessing we're going to see 4,000. That's my target. I think we could see a move down to 4,000. 4,200 I think is a given. So for the next week or so, you're going to want to stay short. You'll do better staying short. Way to go, Paco. Paco knocking it out of the park today. He says, with just one contract, 4 high probability trades, he says, I just closed $205 with the Hawk and the Raptor. Nicely done, Paco. Good for you. All right, let's see if we can't get back. Andrew is asking, how does the DTS work on the Forex markets? Do you have any examples to show? I only have an email or a small Forex account and can't afford to trade the futures. Don't have funds to open a futures account. Okay, yes, the DTS system does work on Forex. Let me see if I can't get a Forex feed here. And you'd have to get in touch with Adam. I think Michael is still doing the Forex for the DTS system. I don't follow the Forex very much myself. For those of you who are trading smaller accounts, I would highly recommend you explore the world of the Nasdaq. It's a $5 a tick instrument. It's pretty affordable. Most brokerages will allow you to open up an account with as little as $2,000. Now, I wouldn't suggest necessarily trading the Nasdaq with $2,000. $5,000 would be probably my absolute minimum I would suggest. And I'm just waiting for the rest of the charts to load here, and I'll pull over the British pound US dollar pair. Another great market to watch for those of you who are shorter on funds is perhaps the SPDR. That's the ETF derivative of the E-mini S&P. The symbol for that is SPY, S-P-Y. Okay, so here's the pound US dollar pair. And this is on the Hawk Scalper. And you can see here we have a first micro-macro cross signal right there. Oh, here we have another first micro-macro cross signal right here. Now, I haven't done this before. How is this going to work? Yeah, okay. So what I need to do is in the Trade Manager, there are settings that allow me to block my my quantity, so I get accurate rounding here. So you just have to ignore the quantity. There is a way to fix this, but it looks like this would be your scalp trade. You'd be in and out for about $100 on that one. So again, here's the Hawk. This is the US, or pardon me, the British pound US dollar pair. Oh, hey, I bet you guys saw this one right here. There's a macro pullback. Market pulls back to the macro line, micro line changes color. That's a macro pullback signal. That's a high probability signal. Note all the yellow bars here. Remember how I said we don't trade yellow bars because, well, it shows us sideways chop, and that's exactly what we're looking at. Okay, let's bring the Falcon over here real quick for those of you interested in the Forex. Okay, all right, here. I'm going to show you something that no other trading room moderator is ever going to show you. This is a trend change signal on the Falcon. And honestly, I probably would have put my stop up above here. Now, you may or may not have been able to afford this stop. This is relative to my account. But what I'm showing you here is a signal that did not work out. See, it did not hit its profit objective. The good news is the market did give you a couple of chances to adjust your stop. You know, it made an attempt to go lower here, made a second attempt to go lower here. This one should have had some follow through to it, but it didn't. But even with the unfortunate stop out, it is still not more than I can afford, right? Very, very important. Don't lose more money than you can afford. Okay, here the pound US dollar pair is about to produce a buy signal. You see you got the warning dots, you get the audio alert. It gives you a chance to set up and look at taking this signal. The only thing I don't like about this signal is that the structure is very weak, right? I'd pretty much eyeball my entry or my exit somewhere down here because I don't have more structure. I don't want to stick it right down here this early, because if the market swings a little bit, see how sometimes it gets a signal and it needs to reset itself, it needs to normalize itself a little bit. I don't want to get stopped out just because the market comes against me a couple of ticks. Well, there we go. We hit our profit target. So that was, again, a good high probability signal. So there's the pound US pair. Oop. And last but not least, let's take a look here at the Eagle. This is the Eagle trend trader now with the pound pair, or pound US dollar. And well, we did get a red bar buy signal here, which is a high probability signal on the Eagle. I'll be honest though, that one would have been a little bit difficult to take. You'd really have to be on your game to catch that one. Would have got it on the Hawk though. I have a feeling this one generated the same time we saw that first micro macro cross signal on the Hawk. So the Eagle, not so much in trend mode this morning. Yesterday we had a green bar sell signal. This is a high probability signal on the Eagle. I know I haven't spent a lot of time with the Eagle today, but that is a signal. And yeah, we've had some follow through here, but the signals have been a little bit, oh, there we go. A couple days ago we had a nice with trend signal right here. That's a very solid signal on the Eagle trend trader. And you can see we had a decent trend as a result. All right, so we'll put that away. I'm glad you asked that though, Andrew. I don't get a lot of people asking about the Forex. But yes, any chart you can plot, like I said, I'll plot the SPY here also so that you guys can see what that looks like. Oh, and yes, I'd better get crude oil up here as well. It's going to be crude inventory here in a moment. Thanks, Tony. Okay, we'll do crude oil first, and then I'll show you the SPY, or the spider. Okay, now with crude oil, inventory report is in a couple of minutes here, so I'm going to hurry. The market has been moving very nicely sideways, and we're pretty much skewered by our primary resistance. I'm going to use my OCO function, and I'm going to buy above the high, and I'm going to sell below the low. Now, when you use the OCO function, it's important to remember these orders are live the moment you put them on your chart. If I wanted to be a little bit more conservative, I could enter above, say, the resistance line and below the median line, which is going to offer support. Because, hey, it's crude oil, and we know how crude oil likes to hop around. Oh, and I better make sure I have a stop strategy enabled, and I'm going to make this a little bit wider. There we go. So I've got my auto stop in play. I've got a stop strategy. I've got my entries. Okay, we're ready to go. Crude inventory should be hitting the floor any moment now. Come on. I didn't put the Geiger. Oh, there we go. Okay. Okay, so a little bit of a dip to the short side. I'm going to disable the break-even trigger. And you can see a trade manager automatically gave me a stop and rolled my stops down. We're fighting the median line here, the support on the median line. Personally, I would have been more bullish on crude, but maybe not. What's below here? Oh, next stop 44.01. You know what? I may throw in a profit order there. Come on, get down there, crude. Oh, look at them just holding that support. If it folds here, if somebody takes 44.40, we're almost sure to see the market head lower. Okay, so we would have hit our break-even trigger. We would have hit our high probability profit target now if I was just scalping or swing trading, pardon me. Come on, get down there. The other thing with the trade manager here, and this is true of the Trailblazer as well, is you have this break-even button. You have the break-even triggers that you can set, but let's say you're getting anxious about a trade. You can force a trade to break even, and you can preset your offset as well. If you want to say break even plus 4 ticks or break even minus 2 ticks, you can do all that. You can preset it. I'm not liking the support in here. I'm going to tighten my trailing stop a little bit, throw it in above those highs. What have we got for open profit at the moment? Oh, well, you know, that's not bad, 150 bucks. Be ashamed to see that go. That's what the close button is for. But I'm going to try to be patient with this one. We'll see if the sellers can't take it down to this 4400 line, 44 even. That would get us down to the primary support. Come on. Come on. No. The seller's got to dig in here. If they fold here, where they're trading right now around 44.50, if they fold up here, the market's going to go higher. We may as well take our stop out. But that's the OCO function, so that's another thing that you can use the trade manager for. You set your trade, your OCO, so one cancels other, and the trade manager automatically gives you a stop. It does not, with the OCO function, it does not give you auto profit targets. You have to manually set your profit objective. Yeah, they're working too hard trying to get down there. Come on. Yeah, Jim, you're right. Jim says crude oil had very light selling on the way down. You see the width of these bars? I forgot to mention this is the dynamic equivolume charting. This too will work on any chart, not just a DTS chart. Equivolume shows you volume on each of these bars by displaying wider bars for more volume, narrow bars for thin volume. And normally when the market is trending, you get thin bars. But when it's hitting a turning point where the buyers and sellers really start to dig in, you tend to see wider bars. All this resistance here, this support, I suppose, was done on very light volume, which is odd. You don't normally see that. You normally see the bars get big and chunky like this. So yeah, Jim, you're right. That's a little peculiar. Okay, I'm not going to give them any more. I'm going to snap the trade to break even now. If they fail at this bar, well, then go ahead, stop me out. But otherwise, you're going to have to, the sellers are going to have to pick it up. And again, you know, at the end of the day, let your pocketbook be your guide. There's 300 bucks sitting there. I'm going to go for the full 500. We'll see if we can't sneak that out of there today. Come on. You know you want to. Well, hey, the good news is gas prices will be going down at the pumps again. Oh, dear. I'm so funny. All right, so you see how the trade manager is rolling our stops for us automatically. A lot of people struggle with stop strategies. They don't know how to manage a trade once they're in it. In fact, I may go with a parabolic now, get a little bit more aggressive. Try to protect a little bit more profit. But that helps take a lot of heat out of your decision making. You know, you've got everything from a fixed tick strategy. Chandelier is very conservative. Super trend is a great ATR derivative. Parabolics, bar high low, as I mentioned, is a very aggressive stop. If you're really keen on saying, hey, Eric, I really don't want the market to back up on me very much, well, there you go. Just lock in that profit, squeeze the market, make it prove you right or stop you out. As a friend of mine used to say, kill me or make me rich. Just get in there, give me my money, or stop me out and let me look for the next trade. Tony asks, Eric, what do you click to see the volume of the individual candle? If you have a 3-button mouse, click the middle button. If you have a scroll wheel like I do, depress the wheel, and you'll see the volume on that particular candle was just shy of 23,000 shares, or contracts, I should say. The current one has got 5,000 and counting, 5,200. Come on. Here, we're going to help it down. We're just going to pull it a little bit down. Here we go. Come on. Get down there. Great question here from Steve. Steve asks, do you prefer the NQ over the ES for account sizes or movement? And how hard is it to import and set up? Yes, I do prefer the Nasdaq. The Nasdaq is one of my favorite markets. And excuse me here for a second while I squeeze that market a little bit more. Come on, give me the couple of ticks from our profit target. I'll tell you, Steve, the reason I like the NASDAQ is it gives me more flexibility. The NASDAQ trades at $5 a tick. The E-mini trades at $12.50 a tick. That means that for each E-mini contract, I can trade at least 2 NASDAQ contracts, and depending how the trade sets up, sometimes 3. That gives me a lot more flexibility in my trading. let's say I had 2 contracts here with this oil trade. Well, it would be a simple matter to take profit on one contract and leave another one on as a runner. This is the problem I run into all the time trading the E-mini, is that very often the E-mini will only allow me one contract. So then it's, well, do I take profit on target? Do I try to let it run out? What do I do? Whereas if I'm trading the Nasdaq, I can have at least 2 contracts in play. Like I say, sometimes 3. So if I catch a bit of a runner, okay, I'll take profit on part of my position, and I'll leave something in there as a runner. So I really like the flexibility of the Nasdaq. Some of you will have heard this story before too, but I didn't trade the Nasdaq for the longest time. And in the trading room, there was a little old lady in Florida, stereotypical little old lady in Florida, and she was trading lights out. She was, she'd be posting, oh, Eric, I just took another $500 out of the Nasdaq today. Oh, Eric, I took $1,000 out of the Nasdaq. And I thought to myself, I better take a look at this Nasdaq market again, because I hadn't looked at it in years. And sure enough, the volatility was there. The Nasdaq was producing some very nice moves. The follow-through was there. And of course, at $5 a tick, it also gave me the flexibility. So I think all those things are really big pros for trading the Nasdaq, especially if you have a smaller account. If you're trading a big account where you're going to be trying to go in with 10 contracts or 15 contracts or more, you're going to start slipping on the Nasdaq. You're not necessarily going to get the fills that you want. In that case, it's going to be time to migrate to the E-mini. And because the E-mini, it can absorb all the volume you can throw at it. You can throw 100 contracts at the E-mini, it won't blink an eye, won't bat an eye at you. And the second part of your question, how hard is this to import and set up? It's not hard at all. It's comes out of the box. Ben is the programmer or one of the programmers. If you have any issues, he's always available to set things up for you or fix things. There's videos. There's instructions how to set it up. Really, it's just plug and play. You load it onto your NinjaTrader. You open up your chart. You use your Hawk template, your Falcon template, your Raptor template, whatever the tool of choice is, and that's it. You set your brick size, and you're off and running. Yes, NR, this is tick data. Now, this will also work on other chart styles. So for instance, if you don't have tick data, let's say you're running a 3-minute chart, you're going to see here in a moment, you still generate signals. The bars, of course, are going to be different sizes. We could even take it down to say, I haven't looked at a 1-minute chart. Let's take a look at a 1 minute. You can see you're still generating your first micro-macro cross signals. You're still going to generate your macro pullback. This is all in the overnight here. That's why it's so thin. Let's go to yesterday's session. That's at midnight. Hold on, I'm getting there. So here's a macro pullback signal. So the signals, they still print the same way. Here's a red bar buy signal with the subsequent failure. Here's a first micro-macro cross. So you can do it without tick data. The chart style that comes with the DTS system is called the mean Renko bar. Where is it? Right there. The mean Renko bar. And I'm going to use the dynamic equivolume bars. Oop, and I want a 6-tick brick for my Hawk. But if you don't have tick data, you can imitate or still generate the signals with time-based data as well. But tick data is preferred. Robin asks, is there a free trial? No, that's the reason for having the trading room, the Wednesday morning trading room, so that you guys can see how this works, how you can see how it works real time, that you can see I'm not just cherry picking trades. NR is asking about the cost. I'm going to give you Adam's email, and there's also cost. I'm going to give you Adam's email because sometimes if you're looking to bundle a couple of things, Adam can give you a discount. But the cost is also at the Indicator Warehouse website. So you can go to indicatorwarehouse.com and you can see some pricing information there. It's not cheap, but I also don't know the current pricing of it. But, and I know it's a cliche, but it's true in so many things, you really do get what you pay for. This ain't a $99 indicator. I know that's bad English. It's not a, you know, it's not a cheap indicator that you're going to find at some of the indicator websites that are out there. This is a proven trading system. It's a complete trading system. You got your signal generation, you got your stop management strategies, and you have your risk, your money management component. So it's, you need 3 legs to the trading stool to make it as a trader, and yet 99% of traders, well I shouldn't say 99, 90% of traders, the same traders that tend to be losing money all the time, focus on only one leg of the trading puzzle, and that is their entry. They think if they can just eliminate a losing trade or a losing signal that they can make money. And I hope that from this morning you can see that it's not that at all. You need all 3 things. You need a good signal, you need a way to manage your trade once you're in it, and you need a way to manage your money. Yeah, I'm getting some testimonials here from DTS owners. Tony says it's worth every penny. Jim says the tools give better probability to be profitable. Good quality tools make a difference. And you know, that's true for every facet of life, right? Whether you do woodworking or you work on your car, or whether you do landscaping, or shoot, whether you do painting, or whether you're an artist and you do painting, or you know, whether you like to sew and you sew, your sewing machine, the quality of the tool makes all the difference. Yeah, Yo-Yo Ma may be able to make a cheap cello sound good, but he's the exception. Most of us need a good cello to make us sound good. or make us sound any good. All right. Eric Clapton can make a cheap guitar sing, but the rest of us need a good quality guitar to sound any good. And even then, it's kind of stretching it. All right, well, the markets have gone a little bit quiet on us here after the early dive out of the gate. I'm thinking, you know, it's the kind of situation we may see a little bit of a pullback. I would not get too eager to buy. Steve asked, can I ask how much you made this morning? Okay, well, you're going to have to take this with a grain of salt, Steve, because I haven't had a chance to manage all of these positions as I normally would. So we made 200 here on the Hawk. Did I take a Falcon trade? No. Our Raptor trade, I think we got stopped out for a loss. So there was a loss on the Raptor trade. But again, to be fair, I didn't get a chance to manage this trade. So again, take these things with a grain of salt. Did we take an Eagle trade? No, we didn't. We did manage to follow our crude oil trade a little bit. This one would be a little bit more realistic, and that one we hit our $500 target. But like I said, take these things with a grain of salt, because when we're trading in the room and we have an open trade, I'm not explaining the merits of multiple positions and position sizing. We're actually following the trade a little closer, adjusting our stops and so forth. But hey, we want to be transparent here. I'm not going to be accused of cherry picking trades or you know, only showing you the good stuff. I'll show you the bad stuff. The signals, you know, this is why, here's an example why I don't like to run really tight stops. Now, this is not a quality signal. It is, well, pardon me. It is a quality signal. Technically, it's a first micro macro cross. But notice what's happening. We got to take these signals in context as well, right? Context is big. You just can't ignore what the whole left side of the chart. So we've had the market in a monster decline. And all of a sudden we start seeing these yellow bars crop up, right? We're getting yellow bars, yellow bars. Yellow bars are a sign of weakness. Yellow bars, the market will often move into a choppy phase as these yellow bars start cropping up. We also have a red bar buy signal, which on the hawk normally develops at the end of a trend. All right, so now here we're getting another with trend signal. Does that mean I should ignore this signal? No, it's a high probability signal, but rather than risk 2%, given the current market condition and whatnot, maybe I'll dial down the risk and I'll only risk 1%. So I can take the trade here, and I know the trade's going to need some wiggle room, and in which case I would try to put it up there. And look at what Trade Manager did. It said, no, sorry, Eric, at 1%, you can't afford to take that trade. That's going to be out of reach for you. All right, so let's say I try to, I'm stubborn, I want to take the trade, I risk it right there. Okay, so Trade Manager says, all right, you want to do that, you can afford 1% of your capital, $155, you can afford to lose that if the trade doesn't work out. So the market brings us in, and now we're taking a little bit of heat. We're getting a green bar sell, which might see the market try to dip here lower again, but the point is, yes, it's a high probability signal, you know, just on the surface, but when you take the whole context into consideration, it's not necessarily a signal I'm going to go crazy over, right? I'll take it, but I'm going to dial down my risk amount. Or if I try to take it and I really want to set it up this way, Trade Manager says, sorry, you can't take it. Okay, well then I'm going to have to pass, right? The Trade Manager is here to keep you from blowing yourself up. So, you know, don't be like a little kid and say, well, I'm going to take it anyway, and just end up taking a loss or losing something you cannot afford to lose. Steve asks, is the trading room open all day, every day? And do you moderate all the time? No, the trading room is open for the morning session. It is open every trading day. Occasionally, once every couple of months, I'll take a week or sometimes 2 weeks off. Just, you know, I need a little bit of a break. The trading room has two parts to it. Namely, it is a trade call room. Yes, I do my best to point out good trade opportunities to you. But it is also a trade or a training room where I try to get you to be proficient with your own tools. So I highlight things like this and I explain, okay, first micro macro cross, this is why we may choose to lower our risk exposure because of yellow bars, because of the big trend, and so on and so forth. So the objective of the room is to make you proficient as well as showing you high quality trades that you can shadow. It's as like one trading room attendant said, heaven forbid, Eric, you get hit by a bus. Which, you know, I know she meant well. But the point is, you're investing money so that you learn how to use your own tools. So you don't have to rely on me all the time. So that, you know, if I do get hit by a bus, or even if I just catch cold, there was a couple years ago, I felt okay, but I had laryngitis. I sounded horrible. I was in the room anyhow, but it was painful. I listened to the recordings and I was like, oh my gosh, why did anybody stay in the room with me? All right, you guys, I'm going to have to duck out a couple minutes early here. I've got a meeting at the top of the hour. So if anybody has any questions, please type away quickly. Otherwise, we're going to have to close up the room here this morning. And I do appreciate everybody's attendance, and I hope you found it at least a little bit educational. Maybe some of you even were able to shadow a couple of those trades and hopefully even walked out with some money. Robin, yes, the charts are on YouTube. Indicator Warehouse has a YouTube channel where you can go and you can watch each day's trading. And this one will be uploaded probably within the next day or two. All right, you guys. Yeah, Robin, there are examples of the trading room at the YouTube channel. And David, yes, the trading room is free for DTS owners. If you are a DTS owner, you get lifetime access to the trading room. Not many trading systems will say that either. And, you know, email's always free. And the trading room, you can ask any question you want if you're having trouble with a particular signal or you're following a particular market and it's giving you fits. Hey, that's what the trading room is for. You can ask those questions and I'll do my very best to answer them for you. All right, you guys, the open house room will be open again next Wednesday. And DTS owners, I am going to see you guys tomorrow morning. So take care. We'll see you guys then. Bye for now.